What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and we know right now the real estate market is hot. It is crazy. Inventory is flying off the shelves, and I know in some areas it's not. I'm not talking about San Francisco, New York City, Chicago right now, but in many markets around the country and on average, real estate is hot right now. And the other thing that we know is that real estate is primarily driven by demographics and interest rates. As interest rates go down, it makes it more affordable for people to be able to afford higher priced assets like real estate. And so that drives new entrants into the real estate market. And demographics is the other thing that controls or influences the pricing of real estate. If there's more people in an area than there are places to live, that's going to drive prices up. And on average, across the country, we have a demographics nightmare right now where there's just not enough inventory, and we are years away at current development paces from inventory catching up to demand. Further than that, understanding that inflation is happening right now, it is coming on strong. The government is printing more money than it's ever printed before, and many people want to get their assets, their money, their wealth into real estate, which historically protects you from inflation because real estate is an inflation hedged asset. It goes up in price along with inflation. So today we are going to look at 5 different ways that you can invest in real estate, 5 unique ways that you've probably never heard of before. Ready? Let's dive in. I know I said we're going to look at 5 different ways to invest in real estate. Technically, we're looking at 8. And I said 5 because those are the unique ones. Those are the ones that I really am excited to share with you guys about in case you've never heard of them before. But we're also going to go over the basic ones, the first 3 that most people think of when they think of investing in real estate. Number 1, own your own home, right? This is the most common way that most people invest in real estate. It's just buy the home that you live in. And typically, this is the worst way to invest in real estate. Okay, I guess it's not the worst. The worst way to be, zero exposure whatsoever, but typically buying your own home is not the best way to make money in real estate, simply because when you buy your own home, like Robert Kiyosaki likes to say, it's a liability. It costs you money. It's not technically an asset because it doesn't make money for you. Yes, over time there will probably be appreciation, but most of that is due to inflation, and you're not going to be producing any cash flow from it. But for most people, this is going to be the easiest way to have some exposure to the real estate market. Just buy the home that you live in. Number 2, REITs. REITs, real estate investment trusts. These are publicly traded companies that invest in some sort of real estate. You'll want to be very careful with these because there are tons of different types of REITs out there. There are office space REITs, there are hospital REITs, there are hotel REITs, there are residential REITs. There's all sorts of different REITs out there that are just publicly traded companies, and all the money that they have, they take and they invest it in various types of real estate. So you have to read the descriptions, read the prospectus, read the information about one if you're looking at it. But this is a very easy way if you're trying to invest in an account that doesn't allow you very many options. Usually there's 1 or 2 REITs in there. The other thing you want to watch out for is the fact that since it's so easy to get money into REITs, usually the price is bid up pretty high, where the return is a lot lower compared to some of the other forms of real estate investing that tend to take just a little bit extra work. Now, the third way that is similar to REITs is going to be stocks. And you might think, what's the difference here? But a stock is a single company, not a trust or a company that pools a bunch of money to invest it for investors. A stock is going to be just, like Apple is a stock, right? Google, or Microsoft, Amazon. So there are actual companies out there that aren't REITs. They're just a regular stock. All right, so those are the first 3, and those are the most common ways that most people think of, and those are really the easiest ways to get money into real estate, which means that your returns are not going to be as good as the next 5, and these are the 5 that we want to focus on. The first one of these is going to be buying a rental property. It's a single family home that you buy, that you rent out. Now, this can come with some extra work, especially because there's many people who do not live in an area that is a good rental market. There are fantastic rental markets all across the country, but the chances that you live in one of these is probably pretty low. So if you do live in one of these, fantastic. You can buy a property, you can manage it yourself because you're close by, you can rent it out. You can do the maintenance, and your return can be huge. Even today, even at the real estate boom, rents are going up massively as well. And that's one of the nice things about a rental property that you're renting out. It produces cash flow. It's an inflation hedge. So as inflation takes off, rents go up. That's going to increase your income. And if you don't live in a state or in a city with a good rental market, you can always use a service like roofstock.com. I've used them before. They're a great service. They locate and source curated homes for you, single family homes that will allow you to purchase out of state rental properties that are basically ready or close to ready to move in, and they have a list of pre-approved vendors if you need a local management company or anything like that, and so they make it very easy for you to purchase rental properties in an area that is not the place where you live. Now, the next way, number 4 on how to invest in real estate, is going to be multifamily, and this is usually an even better way to invest in real estate. It's going to have different pros and cons than single family, but what I'm talking about here is 1 to 4 units. So like a duplex, a triplex, a fourplex. And so if you get one of these, well, number 1, you can get one of these from Roofstock as well. They have some of these properties. Usually your return is going to be a little bit better, but sometimes the headaches can be a little bit higher too, because if you're living in a multifamily property, usually you're not going to treat it as your home as much as you would if you were living in a single family home. There's just a little bit of a different clientele. But some of your other costs will be lower as well because it's all in one property, so property management and taxes and other fees like that will probably be a little bit better percentage-wise. It also eliminates some of the risk because if you have somebody move out, you're collecting half the, let's say you have a duplex and one of them moves out, you're collecting half the rent now instead of going from 100% to 0%. So the more doors you have, the more you distribute that risk across, you diversify a little bit. Even if it's all in one property, you've got 4 units, somebody moves out, you're still at 75% of your income. All right, number 5, the 5th way that you can invest in real estate is development. And you might think that you don't have enough money for this, but there are some very creative ways out there to get your hands on really easy access to money to do development. Whether it's building, whether it's renovating, whether it's fix and flip, you can get a 6 to 12 month hard money loan, build your property right now, renovate your property right now, and then sell it or refinance it and rent it out. Back in 2009, 2010, 2011, all the big boys, the way that they were making money in real estate, the big money, they were just buying properties. That's all you had to do to make money in real estate back then, is just buy them. And then at the next couple of years, you couldn't do that anymore because all the prices had come up and all of those deals had been bid up. So the next way that you had to make money in real estate was value add. You had to install washing machines and dryers in the units. You had to redo the floors. You had to do a new paint job. You had to put a pool in behind the property. Whatever. You had to increase the value of the property somehow. That's how they were all the big money was making money in real estate. And now that that's been done pretty much everywhere, the main way that the big money is making money in real estate right now is development. Since real estate supply is so low compared to demand, inventory is flying off the shelves in most cities across the country. There's just not enough supply in order to meet the demand. It is very profitable now to develop real estate, and individuals can do this too. One way that's really easy to do this is to use a service like Ground Floor. Ground Floor, you can go there, you can borrow anywhere in between $75,000 and $1 million. Your loan would be in between 6 and 12 months. No payments until the loan matures and is due. They've got a great user interface and they make it really easy for individuals, even with no prior experience, to be able to access this market. Now that leads us into the 7th way to invest in real estate, which is lending. And you might think you don't have enough money to actually make money lending for real estate, but that's not true. Looking at the same service, Ground Floor, if we flip it around to the other side, you can actually lend through Ground Floor. There's other services like this as well, but this is a really good example where you can actually put in as little as $10 into various loans that return anywhere from 6%. I've seen all the way up to 14.5% on these loans that you can put down to even $10 into these loans. So Ground Floor, what they do is they take everybody who wants to invest in this debt, they pool it up together and form that to the one loan to the somebody who's taken out $500,000 to do a fix and flip. And since it's backed by collateral, there's a real property there. If anything goes wrong, that property can be liquidated to repay the loan. And finally, that leads us into the 8th way that anybody can invest invest in real estate, which is investing in commercial real estate. Now, commercial real estate, I have to kind of define that here because it means a lot of different things to a lot of different people. And so, because sometimes when people hear commercial real estate, they're thinking retail space, and sometimes people are thinking office space. So, but technically, if it's a residential, like an apartment complex with more than 4 units, that's a commercial property. So you can still invest in residential real estate, even though it's commercial. There are many ways to do this. You can use different services that are all great, like Peer Street or Crowd Street or Equity Multiple. And the only thing that you really need to know about these is that legally the structure on how these are set up might be very different. Some of these are syndications, some of these are crowdsourced. Ultimately, though, what you need to understand is that these are all ways that technology and some new regulations have been passed to allow people to invest small amounts of money into giant projects. And then you own just a portion of maybe a large apartment complex, just like you'd own a portion of a large company like Amazon. Now, the best part is that the definition of an accredited investor has changed. So at the beginning of the video, I talked about how you used to have to, have at least $200,000 income or $1 million net worth in order to have access to some of these deals. Well, now, as of December of last year, all you have to do to be an accredited investor is pass the Series 65. The Series 65 is a license that previously people like stockbrokers or investment advisors would get, but now anybody can take that test, and if they pass, it costs like $189 to take the test, and it takes a couple of hours to take it usually, but as long as you can pass that test, now you're an accredited investor, and now you have access to some of these deals, regardless of your income or net worth. So I've linked all of the links that I've talked about of all of these services that I've mentioned in this video in the description below. If you're interested in checking any of them out, go ahead and check them out there. And if you do see any of these that where the investment looks attractive to you and it says accredited investors only, but you don't meet either the income or the net worth requirements, you can take the Series 65 now. So that's all for today. I really appreciate you guys. Thanks so much for watching. Have a good day.